This is a great time to be here, though. I just recently came back from Italy and Las Vegas here back in May, where I'd won the trading competition in Las Vegas at the Money Show, and then over in Italy at the trading competition over there. So with this year alone being Italy, Las Vegas, New York, Orlando, the trading competitions there, I'm going to show you some of the exact same techniques I use to win them. So it's a great time to be here, and let's have fun over the next 60 minutes together. Really looking forward to doing that. Now, many of you today probably don't know who I am. Others are very familiar with who I am. For those of you that get Modern Trader Magazine, you can read your articles. Earlier this year in January, I was featured there in Modern Trader Magazine, and there was a write-up gives you a little bit about me, some of the things I trade, shows you some of my trading setup and my screens there, and a little bit about what I do. Also, for those of you over in Italy, just recently featured in your top national publication there, article written about me over there, and it was great timing as I was just about to win the trading competition over there. That was featured in advance of me winning the competition, so that was kind of cool. And also, for those of you that get like the international trading magazines like Traders Mag, I wrote an article there on one of my favorite trading strategies that we will not be talking about today. It's another one, so we're going to be featuring a different strategy, not the inventory retracement bar today. We're going to be talking about something different today. So, but there's some great articles written in international magazines published in different languages for you to kind of go out and have some more fun and learn some more things from me. But what I like to do when we start off on these things, I like to remind people that I'm just like you and where I came from. These are actually the actual library books sitting on my shelves at my home office. And the only difference in this these days, I got a lot more trophies from these trading competitions that issue trophies. And but these are the actual books back when I was a teenager that I checked out from the library. It's kind of funny now, but back then it was pretty cool. You know, it's like how to read the Wall Street Journal, right? Who wouldn't want to know how to read the Wall Street Journal if you're going to be trading? So here I was a teenager, didn't know much, and so I look back now and look at some of the things I was trying to learn and how it did and didn't apply to the real world of trading. So I was just like you trying to learn these things back 30 years ago. In fact, this was me in my early 20s. I was working 2 full-time jobs at the Sheriff's Department, 1 part-time job, and I also had a little baby boy at home. So I was kind of a young father, and so I like to tell my retail and my institutional clients, because I work with retail and institutionals all over the world, I didn't have a Rob Hoffman. I didn't have that mentor that I try to be to all of you. I didn't have that person to help me through the ups and downs and accelerate my process to become a better trader. But what I did have was determination. And many of you here today have gotten kicked around, kicked in the teeth many times in your trading, but you're determined. You're on the cusp of success. You're feeling it. You know you're getting close, but you need that little kick over the edge. And so I'd like to work with people like that. This is the real reason why you guys are here with me today, though. As Dan just mentioned a few minutes ago, I've proven intraday swing trading strategies. These trading competitions around the world are all real money trading competitions, and all but one of them, it was on site. So 18 out of 19 of them were on site. The last one, way down here, second from the bottom, this Infinity Futures Live Trading Challenge one, that one was, since that was one of my brokers, they went ahead and actually just did it live there through the internet for everybody to see it all live in action. But all these other ones were live on the screen, live in front of people around the world. And so it's very exciting to have just recently won this Italian trading competition for a second time as well. So this is the real reason we're here, because the strategy I'm going to share today I use very often. In fact, just used it yesterday again in my trading room, and I used a lot of times in these trading competitions around the world. So this is real world, using real money and winning real awards against top traders around the world. It doesn't get a whole lot better than that. It's not theory. It's not something that worked pie in the sky one time, put on a PowerPoint, and then never works again. It's something we're using continuously. These are what those trading competitions look like. As we get ready to share what I'm going to share with you today, just kind of give you a feel when we've got these massive international competitions there, what ends up happening happening is you got all these traders lined up from around the world representing their countries, and here I am. These guys come for war. You see, they'll bring multiple monitors. They'll bring 24-inch monitors. They bring all sorts of gear. Me, I trade with one laptop when I'm at these trading competitions around the world, gang. Got to keep it real simple, and that's what you guys need. Simple, simple but effective. And so that's what I want to share with you today during this. This was actually my equity curve. This was the only trading competition that actually showed equity curves. They showed the profits, the P&Ls of all the competitors, but they didn't go ahead and normally show equity curves. This was my actual equity curve last year in Italy, and this year in Italy it was even better. We went ahead and started out small and just got bigger and bigger and bigger. I just waited for the right trades at the right times for the right reasons. Last year, you had some nice big trades. Then I had some small ones in the middle at the lulls in the European session. Then coming out of those, had some real nice trades. Then basically went flat and won the trading competition. So and then this year, like I said, I waited and just started trading. Made some smaller profits, made some larger, then made larger, and just that's how I won the competition this year. So really nice stuff. And so this setup here today actually helped me win the first international trading competition. I became the first American to ever win the international trading competition over in Paris, France, back in 2012. Other big names had gone before me from the United States to go over there, and they literally got blown out in the first round. And so, for me to go over there and actually win the competition was a pretty great thing for the country, and had a really nice P&L out of it as well. The trading setup that I'm going to share today was actually the trading setup that helped me get through the first round to move on to the future round. So I actually traded crude oil there early in the morning, and it was one of the first trades I took in the morning. Made about $250 on that first trade. So I was building my P&L to move on ultimately through the rest of the day. It spans over 12 hours, and I grossed $3,992.50 over those 12 hours. So this trade actually helped me with that. And then this particular year, back in 2014, I took 18 trades in 6 hours of actual trading, and this particular time, many of the trades are going to be the one that I'm about to show you. So obviously, it's something that's very near and dear to my heart there. And then as we look at yesterday, as I'm getting ready to show you the setup, I took this trade live in front of a live audience that was there in my live trading room, because I do these trades live on the screen, so they got to watch me put the order. My dome is over here, and they get to see me actually put the order in my live account. I only do it live, no simulated there. So watch me put the order in and watch me take the profit. And so what we're going to talk about now is those entries, what I'm looking for, and then some pretty neat stuff that can happen thereafter. So I just literally took this trade yesterday morning in my live trading room. Okay, so it's something I use quite often. So with that being said, why does this key strategy work, and why do these strategies in general of mine work? What makes this successful basically is my toolbox of strategies and how I'm using them. Most of you here, and everyone starts out with stochastics and RSI and MACDs and a boatload of other common, technical tools. But the two problems usually are that you're either using the wrong settings or you're using them in the wrong way. That's the two biggest problems that I see. Today, I'm going to show you the right way to use just one of these must-know strategies that you can use as soon as tomorrow. So if you can apply this going into tomorrow, this might improve your trading. I'm certainly planning to be back and using this tomorrow morning in my trading room. So let's talk about the rules of this particular trade. So this trade is called a full spike. What is this trade? It's a wide range stochastic spike against the prevailing trend, a short-term, wide-range stochastic spike against the prevailing trend. When do we use this? I use it in trending environments. Once again, most people use stochastics in non-trending environments where the market is trading sideways, and then they're looking for the overbought levels to short, the oversold levels to buy. Okay. The problem is, if you really look at what you're doing in this situation, you're doing what's called channel trading. And most of you that have been trading for any real length of time know that channel trading can really get you into trouble, because what happens is by the time you identify you're in a channel, and then you start trading the channel, you make some small profits, well then you start getting stop losses because it starts breaking out of the channel, only to go right back up your way. Well, then it goes ahead and breaks further, and you get stopped out again, only to break out, break back up again, and you would have been correct. Well, so then what ends up happening is in the final phase of this, where it goes down again, you're like, look, I lost money here, and both times it came back. They're not going to get me again. So then you pull your stops, expecting that it's going to come back again, and then that's when it doesn't come back, and then the breakout trade bites you. Anybody here ever experienced what I'm talking about there, where by the time you identify the trade, you make a little bit of money, and then it's ready to break out, and you end up losing more money than you make? It's a very common situation. Yeah, okay, listen, I appreciate your honesty there, because I can help the people that are honest like that, so thank you very much. And so what ends up happening is that, so that's why basically what this is channel trading, and it can get you in trouble. So I use this indicator, this tool, differently, okay? Now, where's my entry on these trades? What I'm looking for is closes of the stochastic spike above the 80 level. If it's come from below the 20, I want it to close above the 80 level in a downtrend. And in an uptrend, I want it to start from above the 80 level and fall down below the 20 level. Now I'm going to show you lots of examples of this in just a few minutes, gang. And in fact, like I said, I just actually showed you one that I took live from yesterday. Okay, and so let's go back there and just take a look at the one from yesterday. So I want to come from below the 20. So here we have a downtrend. I want to come from below the 20 level, spike up above the 80 level, and then short, and then look for it to push down. Okay. Now let's go back over here. Where's my exit? I'm a big fan of trailing profits there. And today we might actually have time to kind of show you how I do that with the trailing profits process. Where is my stop? Okay, I'm typically looking for trades past a preset stop loss number, or such as a key support or resistance level like a 20-period exponential moving average. Now, the reason why I say a preset stop loss number is I personally tend to use like the 20-period exponential moving average and like a 35-period channel to help me determine stop loss areas. However, depending where you're taking this trade, as an example, like from yesterday, so here, when I took this trade, the 20-period exponential moving average wasn't that far back behind me. It's only like 12 ticks. Okay, and so so not bad at all. Well, but what if this whole thing was way down here and then popping up here, and now the distance from here to the 20-period moving average is like 50 ticks or 60 ticks? Well, that's like $500, $600 depending on the instrument you're trading, gold or crude oil or like the Russell, for instance. So depending on the instrument you're trading, that can be a very big distance. And of course, you're not going to want to have a stop loss so far back behind you there. Okay, and yeah, Tim, you should definitely be able to see the charts there. Hopefully, everybody can see the chart just fine. So, so that's what we're looking at. As far as that's concerned, so the stop loss. The reason why this varies too is because the initial trade can be taken past the 20-period moving averages. In fact, especially with the default setting for the stochastics, there's default settings. Remember, I told you that's what everybody uses, default settings, and then I have my own custom settings I like to use for it. So you want to know your stop loss level before you enter, because we never get smarter once we get into a trade. Okay, and so we can look at it most objectively before we go ahead and take that trade. Now, But one thing to note here is, as I'll show you in a few minutes, sometimes the best trades are taken once we actually do get past that 20-period exponential moving average. Okay, so a couple key points to remember: know your exits, scale outs, stop out points in advance. So if you're using multiple contracts, know where you're going to start peeling off your trades. Whether you're using a two lot, then you're going to take one off. You're using a three lot, maybe you take two off, let one run. Whatever your strategy is going to be here, it's very important that you make that determination before you go ahead and get into that trade. Because again, we will never get smarter, I promise you, once we get into that trade. All right. Now, another key point to remember with this is going to be the next bullet point here. And give me just a second, gang. The chart came off here. Best trades start, and this is a really important point. The best trades start from above the 80 level and fall below the 20 level. Okay, this is like an important thing to note. Those are the best trades. They start from above the 80 and fall below the 20 on the stochastic, and that's going to be in an uptrend. All right, in a downtrend, it's going to be just the opposite. In the downtrend, we're going to be actually looking for the stochastic to start from below the 20 and then pop up above the 80 level. So basically what we're looking for in an uptrend, we're looking for a short-term oversold condition. In a downtrend, we're looking for a short-term overbought condition. Okay? Does that make sense to everybody? Those are a couple things that I want to make sure people understand. And then watch and use in the direction of the 20-period exponential moving average. Now, listen, if your favorite moving average happens to go ahead and be a 19.26195 moving average, that's the super secret one, of course, it's okay. That's not a problem. By the way, I'm just joking about the super secret thing. It doesn't matter if it's a 19 to 21 period simple, a 19 to 21 period exponential. What matters, though, is that you will go ahead and be using 20 bars of data. You're going to be showing about 20 bars of data on the screen using that 20 period or close moving average. Basically what we're looking for is a quality of trend. We're asking ourselves, is there basically in a 45-degree uptrend or a 45-degree downtrend? All right. If you have to pull out a ruler, compass, or any other instrument of mass destruction to go ahead and figure out what the trend looks like, maybe you might want to just skip the trade. But like what I'm looking for here, and what we're going to be focusing on today is this black line. I want everybody to see this black line in here. What you're seeing here on this black line, okay, is this black line in there is a 20-period exponential moving average. So that's the only thing that we're going to be focusing on, with the exception of the actual stochastic down below. Okay, so I'm going to be showing you different examples of different instruments in that. And while we'll do a lot of the questions towards the end, Chris, I'll answer this one question for you there. What chart time frame do you focus on? On an intraday basis, like in my live trading room, I'm focusing. I have 5 charts that I'm primarily focusing on: 2-minute, 5-minute, 15-minute, hourly, and daily. Okay. Most of my trade executions on an intraday basis during the live trading room hours is on a 2-minute and a 5-minute chart. Why? Because in the interest of honesty, openness, and integrity, every trade that I open, I close before we close the live trading room as well. Unfortunately, there's too many trading rooms out there that what they do, they either trade on simulators, they don't show their live trades, or if they do get into a trade, let's say it's losing money, then what ends up happening is they don't ever show you the result. They're like, well, I really like this position. I'm going to hold on to it because I think it's going to come back. And then you see that it never came back, but then you never hear about the trade again. So what I do is I go ahead and make sure I close out the positions before I close the live trading room. So that means I'm primarily focusing on 2-minute, 5-minute charts for executions for those morning hours. But also, if you're holding for like all-day swing positions, intraday swings, Chris, then we're going to be looking at the 15-minute, and hourly as well. And the daily chart is really important because I'm looking at those for daily support resistance levels. Now, the time frames I'm showing you here are the 5-minute, 15-minute, hourly, and daily. The 5, 15, hourly, and daily. Okay, but in my live trading room, I also use a 2-minute chart. In fact, I can, this is, what the charts look like. Well, we just had it there a second ago. Let's go ahead and put that back up. There we go. So this is the 5-minute version of the chart that I traded off of yesterday. So I took the trade off of a 5-minute chart at about 11:40, and you can see it ultimately dropped to the tune of about $800 a contract down below here. Dropped about 80 ticks. So, but this off a 5-minute chart is where I took this trade. I entered here. Okay, so with that being said, the so 2-minute, 5-minute, 15-minute, hourly, and daily. Okay. All right. So we're not going to go ahead and answer any other questions at this point. Let's go ahead and move on then to some examples. So this is gold. And with gold, what we see here, this is the daily chart. See that nice uptrend in gold. So what's happening here, we get an uptrend, then we get a pullback. So this is what I'm looking for. I'm looking for when my stochastic goes ahead and starts from above the 80 level and pulls down to or through the 20 level. Although those are going to be the favored trades. All right. Now there are some trades you can take. A little secret there that only pull back 60 ticks. So it might start at the 100 level and only pull down to the 40 and be a good trade. But the best ones, the premier ones, are going to start from above the 80 and pull down below the 20. All right. And then what we're doing there is once it hits that 20 level, this isn't an uptrend. So like basically I'm looking for a short-term or in this case oversold condition. I'm looking to go long when this bar closes. All right. So on a daily chart, that means I'm going to take the trade a few minutes before today's close, expecting that tomorrow is going to rally. If I'm afraid of overnight risk because of like the situation we have right now, with like Brexit, for instance, a lot of overnight turmoil, up and down, then in that case, what you can do is hold off till the next morning to try to avoid any gap ups, gap downs. Now, the only problem is if you've got a buy signal that gaps up in your favor, you may be eating away at a lot of your profit, okay? But in the current environment where it's pretty hot to handle those overnight trades, that might be a good risk-reward trade-off to give up possibly a few hundred, maybe even a few $1,000s in profit to go, depending on the size that you trade. If you trade institutional size like you might be giving up a lot there. But to avoid that risk of being down several $1,000s or more, it's not necessarily a bad trade-off. Okay, so here that's a daily example of this. Now, I'll show you here in a few minutes how I trail these trades, but so that's a daily example. Here's an hourly example. Okay, same thing. We got that beautiful 20-period exponential moving average. We're in a trend to the downside. Now, here's what's basically happening. In a downtrend, unfortunately, most retail traders don't believe the trade is a good trade at the time that they're taking it. So what happens is they need lots of confirmation. They need lots of confirmation. So they need all these big red bars. Many of you here that I'm talking to today know exactly what I'm talking about. You like the big red bars, to take short trades. You want the big green bars to take long trades. Well, the problem is though, by the time we get that kind of blow off, that kind of signal that everybody and their brother is noticing out there, then what usually ends up happening, that ends up being a short-term retracement. Okay, so the prevailing trend is still there, but it ends up being a short-term retracement against the trend. And unfortunately, that's usually enough to do one of three things. Number one, for those people that went long up above, it gives them false hope that, go back up my way, okay? Number two, the people who are thinking about shorting, who didn't short yet, start to see it go back up, and they're like, whew, good thing I didn't take the trade. That would have been another one of those losers, only to watch it turn right around and go back down their way. I bet you many of you here have that happen to you all the time. You had the right trade. The trade starts going opposite of the way you thought it was going to go temporarily, only to have it go right back the way you thought, but you got spooked out of the trade. Okay, this is perfect for you. Then there's the traders that they need that confirmation. So then all of a sudden they finally get enough big red bars. They start counting up. Oh my gosh, I should have shorted here. I should have shorted here. I should have shorted here. I could have made $1,000 if I would have just taken this trade way up here. And now it's down here. Well, the market can't stick it to me anymore. They can't go ahead and keep me from making money anymore. I'm getting into this trade, and then unfortunately, that's when the market's ready to pull back. So what I'm looking for is I'm looking for those short-term overexhaustions into the direction of a trend. Wait for a short-term pullback to relieve that overexhaustion. That's where I enter, and then look for the trade resumption. Okay. Does everybody understand that concept? I'm looking for short-term pullbacks within trends. Now, so then what we want to do is great. So then what we do is we're looking perfect. Excellent, gang. So then what we're doing is we have we start below the 20 level. We want to rally up above that 80 level, right? And once we get above that 80 level, I want to short. Now, you'll see the distance from here to here. Okay, that depending on the instrument you're trading and the time frame you're trading, that could be a very huge distance, and you may not want that kind of stop loss on your trade. That's where you're going to have a predetermined stop loss number. However, if you're close enough and take the trade close enough to the 20 period as your initial entry, then you can use a close back behind the 20 period as a potential stop loss point. All right, so that's why you want to have, if it's too far away from there, it's too rich for your blood, you can still take the trade. You just have to go ahead and have your predetermined stop loss. And I'm going to show you how I trail in just a few moments. So again, here's another example on a 15-minute chart. The market clearly way overdone to the downside, but see, we as small lot retail traders, we don't want to take these small little bleeds, do we? Don't you guys hate that when it just kind of slowly bleeds into your direction, slowly bleeds into your direction, slowly bleeds, but then it keeps having these little pullbacks. Those little pullbacks spook you out from taking the trade. Well, then all of a sudden we get that big red bar, and now all of a sudden you start counting up all the money you're missing, and you knew you were supposed to be taking the trade. You wanted to take the trade, but now you're seeing this big red bar. Well, that's usually then when the market's going to spike back. All right. Well, so there you have it. There's you start from below the 20, spike up to or above the 80, short into the close of that bar. So I actually have a clock. In fact, here's my clock right here. It's 2:44 Central Time here, this afternoon. And so, like, if I'm looking to take a trade now on a 5 or a 15-minute bar, I'd be looking to take this trade in about 20 seconds. So what I'm waiting for, if we had one of these stochastic spikes happening on one of my 5 or 15-minute bars, that bar is about to lock in, and then so I'm just going to stick with you here for a moment on this and show you. So right about now, if I see all the conditions that I'm looking for, okay, right here, and we're about to lock in, I'm going to short right now, a couple seconds before the close of the bar. The reason why I do that is because a lot of the black box systems out there go ahead and identify this setup after the bar locks in, and then they start putting a lot of pressure on these. So what you'll see in many cases is once this trade hits, you'll see, and I work with retail and institutional clients. I work with the guys building the black box systems. I work with small lot retail traders as well. That's the advantage of being a 19-time international trading champion. I get to talk to everybody. And so what happens here is, so I want to be in that trade a few seconds before the close of the time frame I'm looking to trade. So if it's a 2-minute bar, I want to, then here in about 15 or 12 seconds or so, I want to be in that trade. Basically 4 to 5 seconds before that bar closes. If it's a 5-minute bar, again, same thing, and I just demonstrated that for you just a moment ago. So that's how I use the clock. So when I see this setup is about to lock in, I go ahead and we'll take that trade because I want to be in before everybody else, all the black box systems, see the setup. Okay, because I know many of the institutionals are looking for this. Now, with that being said, I like to talk sometimes about these fund trades that I do publicly because they're out there for public domain and consumption there. And this was an actual trade 2 years ago, not this past year in London. The trade, my competitor did show up in London, and I was fortunate to win the trading competition in London last year at the Money Show. But the year before, they had to cancel the Money Show trading competition in London because because the competitor didn't show up. So to make a long story short, basically I said, well, look, gang, you guys were here to see live trading. I don't have a competitor. I don't have a trading challenge, but I'll just do live trading with you. And this was actually the very first trade that I took in that public event that was no longer a trading competition, but at least this was for trading with people. And you can see here, there's my 20-period moving average going down. And by the way, I was the only person in the entire trading venue there 2 years ago at that money show in London that traded live. So, it's always fun to see live trading in real live accounts, not that theoretical stuff. So what happened, you can see we started below the 20 level. We spiked up to above the 80 level. I went short, and then the market rolled over. In fact, isn't it interesting? This is almost identical. I wish I could put this side by side. In fact, let's just try to, I can't really truly do it, but I want you guys to all look at this image, okay? Look at this image, and now let's go back and take a look at the live trade that I just took yesterday in my live trading room with all my students. Right there. Really similar concept, as you can see. So there was the falling 20-period moving average. We spiked back up, made the stochastic spike. I went short right at the close of that bar, and then down the hatch it went. Okay, so as you can see, looking at this now, let's go back to the other chart that I just showed you a moment ago. Very, very similar, as you can see. All right, so it's definitely a favorite trade. All right, now as we go ahead and take a look, let's continue on here. This was another great example of this in action over in Barcelona, Spain. I was speaking on behalf of TradeStation over there, and so I just got done teaching this whole course, this huge group. I had hundreds of people in my thing in Spain, really wonderful. In fact, I'll be back in Spain later this year again. And what ended up happening was, same thing. You can see it right there for yourself. The market went ahead and was there's my 20-period exponential moving average. The market went ahead and spiked back there. I went short at the close, and down the hatch it went. Okay, it started from below the 20 level, went up above the 20 level, or the 80 level. I'm sorry. So I hope you're starting to get the point with that. So let's go ahead and look at some more examples. This time, instead of looking at gold futures, let's look at Apple. So here's Apple. I like to show this because I want to give you different examples, different flavors of these on different time frames. So here's the daily chart of Apple. In fact, I used this actually not too long not these charts here, but if you were following my free nightly videos, I actually talked a lot about Apple and identified some of these trades there. So here you see the downtrend in Apple, the rally back up, and there it is, comes from below the 20 level above the 80. Here's the hourly chart. It's coming down here, pops back up, spikes from below the 20 level, okay, and then we're looking for ideally moves back up to the 80 level or above. So, or it can be at least a 60-tick pullback. A 60-tick pullback is the minimum requirement, but I would encourage all of you, if you're trying this, so if you go ahead and start practicing with this tonight and then are going to look at this tomorrow, put on your simulator tomorrow and try to find this and start from below the 20 above the 80, or from above the 80 below the 20. Okay, it's great to practice with those first. So here we have this same thing. We have the 15-minute in an uptrend. We got that nasty pullback. Okay, that shakes out the traders who went long up above. And unfortunately, too many of you here today know exactly what's happened with this. We go ahead, we see a great trade, we get in too late, it pulls back, it stops us out, and it almost like magic. No sooner do we get stopped out on the trade, it seems like the market goes right back our way. How many of you know what I'm talking about there? How many of you had a perfectly good trend, you got in quote-unquote late, it pulled back, stopped you out, only to go right back up the way you thought? Exactly. Okay, yeah, I appreciate your honesty. Okay, so what I'm trying to show you today now is going to be the way that we're going to try to avoid just that scenario, okay? Dramatically reduce our risk. We're going to identify a trend. We're going to look for a pullback within that trend with measured calculations, okay? And then look for the great place to resume that trend, okay? And again, I just used this again live in my trading room yesterday, so it's not some theory. I've used this to make thousands and thousands of dollars in my live trading competitions and win trading competitions around the world. Gang, this stuff isn't theory. It's real world, okay? And so over and over again, you'll see this. Let's go ahead and switch now. This is the Russell daily, just trying to give you a flavor for different instruments and stuff. So here we have the Russell futures daily, and so once again we have that 20-period moving average rising. Then we start from above the 80 level and we pull down to or below the 20 level. I want to go long at right before the close of that bar, expecting to move back up. Okay, and you can see that over and over again. By the way, what I hadn't done yet is shown you the trailing stop methodology. So let me do that for you real quick. So here's once you're in a trade and you're trying to manage your profits. Would you guys like to know how I do that as well? Perfect. Let's go ahead and talk about that then. All right. So what we do is, remember what I said initially, we're identifying our target out into space. Now, okay, so we're doing that before we enter the trade, okay? Well, here's the things that you have to know. Typically, my targets are either daily, weekly, or monthly pivot points, okay? Those are classic floor trader pivots. Everybody and their brother's trying to sell you a bunch of stuff out there on their reinvented version of pivot points. I'm talking about the classic pivot formula out there, gang. Nothing fancy. Everybody just tries to reinvent stuff, put their name on it, and sell it. Okay, I'm talking about the classic floor trader pivot formula. All right, you can look it up on Wikipedia there if you don't have it already native in your charting package. All right. Now, what we're doing is we identify so daily, weekly, monthly pivots, also long-term key support resistance levels, like right up here, you see I got some big ones up above, so if I'm taking a trade off a daily chart, I know I'm going to smack into resistance right up in those areas, just as I did right back over here. Also, Fibonacci extension numbers, for those who like to use Fibonacci, lots of great different, pick whatever your favorite support resistance level target identification is. That's the key thing. Pick what's important to you and use it. So in this particular case, I'm seeing that we've got a big pivot up above us here. We've also already been rallying for a while. Now, with that being said then, so the trade is taken. That's where this yellow line was. This was a live trading account. Trade is taken live. Now, then from there, we've got the target out into space. So here's how I trail. Okay, initially, what we do is I trail by 50% of 50%. So in other words, once we get 50% of the way to the target, I'm trailing by 50% of profit earned. So in real dollars and cents, gang, that's actually what? 25%, right? It's 25% in real dollars and cents. Okay. Now, watch what happens though. So make sure start out 50%. Then you notice once we get about 80% of the way to the target, now I'm trailing up about 80% of profit earns. This is my methodology, okay? So 50% of profit earned, trailing by 50%. Getting to 80% of a profit objective, trailing by 80%. So notice now we're getting more aggressive with the trailing. Then when we get up to the price, now I'm trailing about 90% of profit earned. Why? Because what's more likely to happen here, gang? Statistically speaking, what's more likely to happen? This market's been going up, up, up the ladder, and now we're about to smack into a major resistance level. What's more likely to happen? Is it more likely to just keep on going, or is it more likely to stop and at least temporarily, if not completely, reverse? Absolutely. It's far more likely to stop and reverse. You got it, gang. So with that being said, notice then what happens is when it gets up to that price and I'm trailing by 90% and it doesn't budge through there, then I just want to put it right up the price and look to be taken out of the trade. Okay? So remember 50, 80, 90, taken out. All right? So what's the goal of that? What am I trying to do? I'm trying to have my cake and eat it too. I'm trying to go ahead and maximize my gains, but also make sure I'm going to lock in some profits. How many of you have ever had a perfectly good profit on the board, but you wanted just a little bit more profit, a little bit more money out of that trade, so you went ahead and elected to not go ahead and take the trailing stop, and you just want to see if it get to your price. And I know that there's some big three-letter schools out there that actually teach that. Don't put a stop out there. Don't put a trailing stop. Just put a target out there and wait till it hits your target. But how many of you have found it misses your target by just a little bit and then turns around and then completely rolls over and either takes away all your profit or worse, goes ahead and actually becomes a loss? How many of you does that apply to? Yeah. And so let's be honest, the vast majority of us, right? If we don't trail them. So what I'm trying to do with this is have my cake and eat it too. That's what we're looking for here. We're trying to go ahead and have our cake and eat it too. We're trying to give it a chance to run, maximize profits, but not let it turn around and become that loss. Okay? So so with that being said, sorry, let's go ahead and get back over here. This trade again, very instrumental. Used it to a lot of the trades I took in this 2014 competition. Basically, what happened was during the U.S. session, the market just started nosediving, and so what would happen is it nosedived. So here I had my 20-period exponential moving average coming down, and so the market would fall, it'd spike up, it'd fall, it'd spike up, it'd fall, spike up. You get the point. And so every time it would pop back up, I would go ahead and look to reshort it. In fact, like I said, this was a live trade that I just took in yesterday's market. Let's revisit that. So now maybe it will make a lot more sense to you as you look at this. So notice what happened. We had the downtrend, right? We had the downtrend in play, and what ended up happening, I saw some, I have these things called accumulation bars and distribution bars. They're inventory retracement bars. That's one that I've written about in 5 different languages in international trading magazines. Well, so I saw a bunch of these accumulation bars going ahead and taking place here. So my expectation was we were going to spike up. So I waited till we spiked up, and then ended up having my stochastic spike, and then went short right at the close of that bar, okay? And then started to go and trail down my profits till I was taken out. So the point is, though, can you see all the elements of the trade there? Nice trend to the downside. Nice reversion back up. So the traders who came in late, so this was the U.S. Open, and of course a lot of traders get hurt at the U.S. Open, chasing after trades there. And so what happened was about the time they're finally convinced that they got to take their trades, the market spikes up, completely destroys them, knocks them out of their trades, because this market had a very healthy reversal here, as you can see. A very expensive reversal to the upside, well over 50 ticks back to the upside, so that's $500 a contract. And so that's a perfect opportunity after they've bled off, they've knocked out all those retail traders. That's a perfect time to short using this methodology from my perspective, and then look for the move back down. And again, that's exactly the trade that I took yesterday morning live. So it's not theory, it's something that I put my real money with. All right. So going back over, here's all the rules. I want to pull those back up for you. Make sure everybody understands those rules. Let's put those back up on the screen for a moment. Okay. And then let's go ahead and talk about what else this means to us. So from a equity curve perspective, this is my equity curve in the trading competition back in 2015 in Italy. This year in Italy, it was even more decisive. Straight up. It just kept getting bigger and bigger. Here, I had big ones, then I had some medium-sized profits, then some big-sized profits. This year, I went ahead and just kept getting bigger and bigger and bigger profits in my trading for the international competition in Italy here back in May. So what we're looking at is we're looking for consistency. And by the way, gang, my equity curve for 2016, if you're in my trading room, you already know this, but my equity curve for 2016 is like that as well. So really great stuff. This is a phenomenal year, and it's going to continue to be a phenomenal year because we got the election cycle. And I've already been talking to those of you that have been following me on the nightly videos, talk about the media and the process of the media and Brexit and the election cycle and what that means to our trading. And this is going to, the second half of this year, I predict, is going to be twice as profitable as the first half of this year. That's my prediction. I think we're going to see a lot more volatility in the second half of the year, and it's already starting off nicely here too with Brexit. So really great stuff. Also, as we talk about using these, this isn't just me going ahead and using this strategy. These are two testimonials that just recently came in, and they mean a lot to me because these are guys so I really want to put this in real terms for people, dollars and cents. So here's this one trader here, Robbie. He started trading back in 1992. He lost money every year except for last year after finding my trading room. Now, I'm not doing a pitch for my trading room, gang. I'm not making you an offer to join my trading room today. But what I want to point out is this strategy that I'm sharing with you today is one that I feature, like I did yesterday, in my live trading room, and he included his 1099 forms and showed me how he was profitable in 2015 for the first time by his own admission since 1992. So he waited 23 years for a positive outcome. He's not afraid to trade now. Gets up and looks forward to trading with a plan. I gave you guys, that's why I put the screens back up for the the rules for that as well. And also, he said some very nice things about our customer service team. We actually won the 2015 American Express Customer Service Award. We're the only company in our entire financial trading education business that did. So that's pretty cool stuff. So I like to brag about that, truth be told. I like to brag more about that than I do my 19 trading competition wins because I'm proud of my team. They do such a great job. They work so hard for you guys. But anyways, the bottom line is, here he is, can provide proof that he's finally profitable for the first time since 1992. That's pretty cool. And then Roger, he's a great student. Clinical psychologist is what he is by trade. He's keeping very careful records now, profits after commissions and fees, and he's more consistently profitable using my methods than at any time since he began trading since 1991. The reason why I thought this was funny, that these two testimonials came in within a day of each other here recently, and I just thought that was kind of interesting. I get testimonials all the time, but I think it's kind of cool. We go back and look at long-term traders and the successes and failures and trials and tribulations and where they're at now. So he says, still have a long way to go to unlearning some of the old bad habits, but I've worked under several mentors through the years, and yours are the methods are the only ones that work for me. And again, gang, I'm using this method that I just shared with you today is being used in my live trading room. It's being used in the live trading competitions. Anybody here ever come to see me in a live trading competition? Anybody here ever watch me do those? Because obviously I do them all over the world. At the Joseph, which one did you go to? Orlando. Oh, okay. So the one earlier this year in Orlando, back in what was that, February or March? Orlando World Money Show. Okay, great. Yeah, Joseph says yes, very impressed, and Dan can go ahead and verify that. Who's the organizer here? That I'm not making this up, but you guys say it. So, really great stuff. Yeah, I do them all over the world. I'll have one in San Francisco in August, I believe, is the next one that I have, and so looking forward to maybe seeing some of you guys there. But so, anyways, great stuff there. And I did show actually DT. I did show Apple a little bit ago as well, so you might have missed that one. Sorry about that. And again, just yesterday, it doesn't matter whether we're talking about stocks, doesn't matter whether we're talking about futures, forex, it doesn't matter you're talking about ETFs, it doesn't matter whether you're talking about options. Because let me ask you a question: regardless of whether this is an intraday option or whether this is a daily option. In fact, let's just call this a daily chart here. So pick your favorite stock. So this is your favorite stock now, and you're getting this setup. But you're an options trader. All right. So what do you do with this, gang? Well, if you see this kind of setup, first of all, which way are we betting it's going to go, up or down? And then, based on the way you think it's going to go, what kind of option strategies could you put on there? And hey, Michael, is this Michael P. That I see at the trade shows, Michael P.? Yeah, I thought so because you have a unique last name, so I thought so. But so hey, Mike, it's good to see you again. So to answer your question, Mike says, can you determine at the open if this strategy is best for a given day, or typically are you using several strategies in a given day? Well, I am typically using multiple strategies in a given day. However, there are those days. So here's what I do based on the quality of trend. Based on the quality of trend, I've got multiple types of trades that I'll take, but when we get these deeper pullbacks, this is the kind of trade that I'm looking for. When we're hugging my speed lines, I'm usually looking for things more like my speed line continuation trades, my momentum shift with trend, momentum shift breakouts. So there's a lot of other type, my inventory retracement bar strategy. So there's a whole bunch of other types of trades I can look for when we're just aggressively dropping. But when we get the deeper pullback that's designed to shake out the retail trader, then this is definitely the strategy. So can I tell at the open? Usually if we're trending, then the answer is yes. If we're sideways and congested, then I'm usually going to step away from this particular strategy. Okay, so yeah, usually I can go ahead and tell. Now, I asked the question, what would we be expecting from an options perspective? And a lot of you did a very good job. You're welcome, Michael. Good to see you again. And the answer is absolutely, we were looking for this to go down. Well, so I can either buy puts, or if you like the right options, like I like to, you could sell calls, right? Multiple great options, no pun intended, with this. Okay? Does that make sense to everybody? So even on the options side, what you do is you look at the underlying instrument, you determine what we're expecting to have happen here, and then we're looking for, once we determine the direction we're looking for this to go, then you're taking the trade in the underlying option. I don't focus on all the Greeks and all the other stuff with options. I keep it real simple, and I think that's been the secret to my success with options, is I look at the underlying instrument, I determine which way it's going to go, and look for the trades accordingly. Okay? Well, it depends. So if I'm selling, then I'm going to be looking for as far out of the money. I want to get paid at least $1 or more premium per contract. If I'm going to be a seller, that's kind of like my little narcissistic or whatever you want to retentive must-have, right? If I can't get it far enough out of the money and still collect a $1 or more premium, then I'm not interested in it. Okay, but the expectation is though, and then if you're taking this, intraday, you're going to want to go ahead and have a high delta in the money kind of play there, 70 or better, to keep the price and the option pretty well in line with each other. All right, so yeah, so oh boy, Joel, that's a whole other conversation. Maybe I'll talk about it in a few minutes here if we have time. Let's see. Trailing stop with options, but basically, like when I'm selling the option, it depends, because you get your theta, right? You get your decay, and so depending on how fast, like for instance, if I do an option, I'm collecting $1, $1.50, $2 premium, and all of a sudden within the first couple of days of being in the trade, because a lot of times my timing is so good that what happens, because I'm using trade setups like this. So what happens is that all of a sudden you'll get the premium decay so fast. And so if all of a sudden, let's say I've got a $1, $2 premium, and then it drops down to $1.50. So in other words, it basically drops by 50% or more in the first couple of days. Well, I'm going to walk away from that trade, and I'm just going to move on to the next option. Okay. So in other words, that's kind of how we're looking at it. So from a quote-unquote trailing perspective. All right. I tend to write options more than being a buyer of options. Just FYI, but that's not saying that's right for everybody. Just saying that I like to do it that way. So so going back, so what I've got here for you guys is this, and then I'll keep answering questions for you. We've talked about this one setup today. But what we've only talked about this for approximately an hour today, a little less than an hour. I've got a 3.5-hour course that goes ahead and goes through this setup and another setup far more in detail. So as I said, it's about a 3.5-hour course. And so what it offers is one conservative trade setup and one aggressive trade setup, so with the specific entries, exits, stops, profit management techniques to help you find precision, award-winning entries to fit your personal style and plan. It also includes my personal optimized settings during this course. We talked a lot about the default stochastic setting, but obviously that's not what I use, as you can see here. I've optimized those settings. So I give you the optimized settings for my favorite stochastic that I use, like I did just yesterday in the live trading room. So it's a 3.5-hour course, goes through that. It's for intraday and end of day. We discuss both intraday, we discuss end of day, we discuss stocks, ETFs, options, that gamut there. And what's really nice is, too, for anybody that likes this course, in approximately a week, we're going to have another a follow-up Q&A. So anybody that gets this course today, you're going to have the opportunity to come to a follow-up class next week with me. I believe it's next week. Maybe it's 2 weeks from now. Hold on a second. It's the week of the 18th. It's on, I believe it's the 19th or 20th. I think it's the 20th, actually. I think it's Wednesday the 20th. Wednesday the 20th, we're going to have a follow-up classes. So it gives you plenty of time to review this information, trade on a simulator, trade live as you see fit, come back with me and hit me up with all your questions there that I can help you back in real time with it. So it's for full-time traders to help them get a lot more trading opportunities, and it's for part-time swing and options traders so they can easily set these up while they have a second career. Okay, that's why I have both intraday and end day. What you're getting instant access to it. So as soon as you go ahead and get the class, you'll be able to study it this afternoon. That's why I said you could be ready for tomorrow morning from my perspective. I certainly will be looking for trades with this tomorrow morning. So it gives you instant access, gives you the indicator settings for this indicator here. It gives you the ideas and settings that I don't share with the public. As I said, this is a 3.5-hour course versus just an hour of basic general public stuff here. That's so you'll be ready for an incredible rest of 2016. Proprietary indicators are not required. So there's 3 segments to this the course. It's filmed over the course of a year. 2 of the segments, the first segment and the last segment, are all with just this indicator in focus. And then the middle section, because many of you are students and have been following me for a long time, I go through some of my other proprietary work in conjunction with this so that people can get more benefit out of this setup if they have my proprietary indicators. But the other setups, or the other courses, the other classes, the first one and the last one, are completely just using this indicator. So in other words, you don't have to have any proprietary indicators. All you need to be able to do is get my stochastic on there and adjust the settings. And so you're going to have my personal settings so you have an advantage over everybody else. So to summarize, it's 2 setups that every trader needs to trade futures, stocks, and options. It's a 3-part video course with extremely detailed explanation of 2 of my favorite setups that I frequently use with entries, exits, profit, stop management, settings for the indicator that we shared with you today. So you can identify this setup starting tomorrow morning. I've used it to make thousands of dollars. Okay, that's all verified during those trading competitions there. Thousands of dollars during these competitions, like I showed you. And normally we sell that course on our website for $497. What I'm trying to do today is give you what I call an ethical bribe. And basically what I'm offering this to you is for $97. If you go to becomeabettertrader.com/setup, becomeabettertrader.com/setup, I'm basically, for virtually free, trying to give you something that you can go take away, see how well it works, and then realize that, hey, wow, no wonder this guy's winning competitions all over the world with real money. He's different. He's not just talking about trading. He's doing it. He's using the setup. I actually showed you a live trade that I did yesterday with real money in my trading room. And so this is really great stuff. So I'm basically giving you what I call an ethical bribe. I'm giving you something for virtually free to, so that you'll take a chance on me. I'm basically taking a chance at you. The trade that I'm making is that you're going to go ahead. I'm a good trader. The trade that I'm making is that you're going to see the value of me, and you're going to want to be with me for the long term. There's no strings attached. It's $97. It's a one-time fee for the class. There's no ongoing charges or anything else, but hopefully you'll see, wow, I want to learn more of his setups. I want to learn more of his strategies. I want to be in his live trading room, whatever, that you'll, become part of our long-term student family, as so many people have. So that's what I've got there. Yeah, it can absolutely be used on TOS. It absolutely can be used on TOS. And so, yeah, I'll put the website address in there. It's becomeabettertrader.com/setup. becomeabettertrader.com/setup. And the funny part is there's actually two setups, so I probably should call it setups because there's two setups, one conservative, one aggressive. By the way, my team is here today, and I'm here. So after I get off the phone, I will go and be answering phones as well with the rest of the team. But if you call 847-235-6131, the team can help you directly as well if you like to talk to a real person. I like to talk to a real person often, so that's how I do business. I like to do things face-to-face wherever possible. That's why I do all these trade shows around the world, because I love to see people in person, and so pretty great stuff. So with that being said, yeah, it's only $97. It's at becomeabettertrader.com/setup. It's about 3.5 hours, so you don't need proprietary indicators. Just to be clear on that, you don't have to. Like I said 2 of the 3 segments completely is just about the indicator, in its own right, and you get my custom settings on it. So like I said, if you could dedicate 3.5 hours to it tonight, you could be ready to start trading on a simulator with this tomorrow morning, from my perspective. Also, anybody that gets this class today will be invited to my special follow-on class to this, which will be held, I believe it's on July 20th. That's going to be a Wednesday, July 20th at 12 p.m. Central Time, 1 p.m. Eastern Time, and that should be recorded as well. So, great place for you to come, ask more questions, and within 2 weeks, you should be a resident expert with this setup, and then be just coming there to that class with me and fine-tuning whatever needs that you have. Okay. Yeah, I'll start answering these questions. Can it be used on TOS? Yes, it can, John K. Can the settings be used on NinjaTrader? Billy G. Absolutely. Yes. For any of you that go ahead, no. Joel, you don't need the speed lines at all for this program. For this program, you need the 20-period exponential moving average, and you need the stochastic. Okay, 20-period moving average and the stochastic for this particular setup. Okay, not finding on the website. This offer is not available on the website. You have to. I think the $497 version of it's available on the website, but if you go there, you're going to pay $497. This link is to the John D. is to the $97 offer. Okay, so I wouldn't pay for it through the website. Okay, all right. So what other questions do we have there? I don't know, DT. Our friend Dan will have to go ahead and answer that. I know there was a tragedy. The previous speaker accidentally shut off the webinar, and so a whole bunch of people got disconnected. And so I don't know what the opportunity will be for recording at this. Okay, so what brand and model of laptop do I use? Well, historically I've used a Toshiba Cosmio, but they've discontinued that now. So there's another brand that I'm going to probably be moving over to, but ask me that question in January, because I made the commitment to wait until January of next year to purchase my laptops. So to purchase new laptops, because I just take one laptop with me to these international trade trading competitions. I don't bring multiple computers. I don't bring multiple 24-inch screens like some of these hardcore guys do. I bring one trading laptop. You need to keep it simple. When you're sitting there for 12 hours under pressure, you've got all these traders from around the world that you're competing against. You can't sit there, and then you got an audience full of hundreds of people. You can't sit there and be stressing out about several monitors and screens and so on and so forth. So, yeah, that's what happened, DT. Yeah, sorry about that. I'm sure, obviously, the last speaker did that unintentionally, and so it just happened. Those things happen. Okay. And what other questions do we have there? We've got just a few more moments. Yep, I'll put the link in there for you. It's becomeabettertrader.com/setup. Not setups, but setup. And yep, it's instantaneously downloadable, and you will be able to go ahead. Like I said, you can watch it right now. Dedicate 3.5 hours to me, and I promise you, you're not going to go ahead and be disappointed. It's 3.5 hours. Well, I mean, I use the trade live, right? Do I have favorite markets I use for the strategy? Honestly, no. I mean, other than the only markets that you would not want to trade thin, illiquid markets. So like even in the overnight, for instance, like I would use this on a normal evening in, like, let's say like the Russell futures at 2 o'clock, 3 o'clock in the morning. I would use it in the DAX. Okay, or gold or crude oil, but I wouldn't use it in thin, illiquid markets where you're getting those price gaps in data. Let me see if I can actually show you what I'm talking about here. Well, you know what? I can kind of almost show you here, right here from yesterday's live trade. So you see where we were in the regular live trading hours here, Steve? We had good, solid, fulfilled bars. But if you notice, in early hours, before 8 o'clock Central Time, you can see a lot of really thin bars and stuff. And you know how overnight you'll get, it almost looks like ticks and hashes, back and forth. Not very filled, liquid trading. If you got that kind of situation, I would encourage you to step away from that kind of trade. Okay, I would prefer to go ahead and have it, be robust trading that actually has the candlesticks playing connect the dots, not where you're getting several tick jumps between trades. As far as stocks, options, futures, forex, ETFs, as long as they're liquid, this strategy, I've used it on a lot of these things. I've got most of my student family is trading one of these instruments in some way, shape, or form using the strategy, so it's very diverse. Like I said, if you think about it, in the trading competitions, yeah, if on their charting platform, Ed, which to my knowledge they have the stochastic, and they go ahead and allow you to adjust the settings on the stochastic. As long as they have the stochastic and they allow you to adjust the settings on the stochastic, which to my knowledge Options House does. Okay. All right. So the DT, I did that earlier with Apple. Yeah. So let's see. Yes. Yes, it is, Cross. Yes, it is. Yep. So if you have that, you have this. Okay. So what we did was we added a third part to this as well. This got filmed over the course of a year. So the last section was really heavy on being a purist with this tool and looking at different markets, like for swing traders as well as intraday traders, and really looking at this puristically with just the 20-period exponential moving average, just the stochastic, and looking at it on multiple instruments. So a lot of different instruments. So it was pretty nice. Yeah. Okay. All right. Okay, Ed, I think we got that for you there. Hey, Billy, you're very welcome. And yeah, I see a lot of you did go ahead and get it, and that's awesome. That's really great. And I appreciate that, because what I'm trying to do here is, look, I'm a 19-time domestic and international trading champion. Nobody else that you've heard today, nobody else that you're going to ever hear from again, and nobody else that you've ever heard from before can say that. You know, I suppose someday down the road it's possible, years from now, somebody could become a 19-time trading champion domestically and internationally. But there is not another 19-time domestic and international trading, real money, on-site trading competition winner anywhere else in the world. This is the real deal, gang. This is real. It's not fake. I can't say it if it's not real. It's real. I'm going ahead and I'm doing that. I'm winning these competitions around the world. This is real stuff. I just used it live in my live trading room yesterday. I've used it to win a lot of these trading competitions around the world. So what I'm trying to do here is literally, most of you guys are being asked to pay, you know, for a lot of different courses out there, $500, $1,000, $2,000. If you go to the schools like Online Trading Academy, they'll ask you for $5,000, $10,000, $20,000, $50,000, you know, to get through all their coursework and different stuff like that. I'm asking you for $97 to go ahead and basically see if you could, because if you can't even make money with this, then in my opinion, you know, the rest of the great strategies, you know, why waste our time? You know, but if you can make money with this, then you probably have a great future with me in other areas of my work. So that's the bet that I'm making, you know, so it's an ethical bribe to you, and it's a trade that I'm making. The trade I'm making, I'm going to give you something with a lot of value that you can hopefully go do great things with, and then you'll be with me for the long term as a student family member. Is that fair? Yeah, yeah. Well, thank you. So with that being said, we're right at time there. Dan, yeah, thanks, Billy. Well, that's great, and welcome to my student family as well. And so, Billy, like I said, plan on Wednesday, July 20th, at noon Central, 1 o'clock Eastern. So this will give you 2 weeks. You can start watching the video tonight. Go ahead, get your settings on there. Start simulator trading. Then go to live trading as you feel comfortable. And then in 2 weeks, we'll work together doing my little workshop there to see what tweaks, beeps, bleeps, and fixes that you need, if any, to help you keep you on the right track and growing. Okay? So very awesome. And I'll put the link in there one more time. And I want to go ahead and thank Dan and the WINvesting team. We worked through, obviously, the little technology blip, you know, when the previous speaker shut us down, but that's okay. They sprung back into action and got you guys, you know, back in here quickly. So thanks to them for that great work. And thank you guys for being some of the world's greatest students. I appreciate all the great questions. And I'm looking forward to working with you guys as we go forward, so you can see what makes me different. And, you know, it's not just the trading competitions, obviously, around the world. There's so much more. And so I'm looking forward to working with you and showing you all that substance as we go forward. So thanks a lot, gang. And also, go ahead and thank you, Dan. So I'm going to turn it back over to you.